On October 19, 1987, markets across the world crashed, with the US Dow Jones Industrial Average plunging 22.6%, the largest one-day percentage loss in its history, and this was called as Black Monday. Fast forward to 2025. On April 6, 2025, Jim Cramer, American TV personality and market analyst, warned of a similar bloodbath on April 7th, owing to US President Donald Trump's tariff tantrums that have spooked markets worldwide so far. Cramer encouraged the voters to reach out to the countries that have not imposed retaliatory tariffs, apparently to avoid a similar rout across global markets. Now, why did the Mad Money host urge Trump to reach out to countries that play by the rules? What led to the Black Monday in 1987? What exactly happened? We tell you all in this video. October 19, 1987, also known as Black Monday, saw the Dow Jones Industrial Average plummeted by 22.6% in just one day. This event triggered a global stock market downturn, cementing Black Monday as one of the most infamous days in financial history. The S&P 500 experienced an even steeper decline, falling by 30% on the same day. The mayhem continued throughout the month, and by early November 1987, most major stock market indexes had lost over 20% of their value. The 1987 stock market crash wasn't triggered by a single event, but rather a combination of factors. Black Monday was driven by a strong bull market that needed a major price correction, as stock values had tripled since 1982. Computerized trading, which was still in its infancy in 1987, was a major driver of the Black Monday. Program trading removed human decisions, with automatic buy and sell orders triggered by benchmark indices. The computers tended to produce more buy orders when prices were rising and more sell orders when prices fell. As sell orders flooded the market on October 19, it spurred other investors to sell in a panic reaction. In 1987, October 16th, the Friday before the crash, the simultaneous expiration of stock options, stock index futures, and stock index option contracts, collectively called triple witching, resulted in extremely high volatility on the last hour of Friday trading. This resulted in large sell-offs in the aftermarket hours, leading to the Black Monday. Experts warned of Black Monday 2.0 after the US stock markets witnessed their worst trading session and the largest drop since the COVID-19 global pandemic on Friday, April 4th. Over $5 trillion was wiped out of market capitalization, and the key benchmark indices bore severe losses. On April 6th, Sunday, Dow Jones futures dropped 1,405 points or 3.7%, signaling a potential Black Monday. S&P 500 futures fell 4.3% and Nasdaq 100 futures tumbled 5.4% as investors sold off former tech stars to raise cash.